Happy Labor Day, everyone. Welcome to episode number 31 of the Traders Podcast here. Courage pays better than fear trading. I am your grateful and appreciative host, Jeremy Hritz. So happy to be back here with you for another episode. Can't believe that it's 31 and we're headed into the greatest time of year. It's fall. And living out here on, I guess, for the East Coast. I grew up in Pittsburgh. I'm out here on the eastern side of Pennsylvania now. We get the seasons, and it's the start of fall and the start of football. You know, my Steelers fandom. And so the leaves, the holidays coming up. This is just a great time of year. So definitely excited and excited to be delivering a brand new episode to all of you here today. And on today's show, we're going to hit Ask a Trader. And then we're going to take a look at what has happened the last few years in the markets leading up to the election and what happened after that. So we're going to look back 2020, 2016, 2008, and 2012. So actually 4 years. So we're going to look and just see what the markets were doing leading up to that, what happened after that. Obviously, we have to take into account what was happening in the economy, the broader economy. If you go back to 08, 07 time, that's when the housing crisis was occurring. So there was obviously an impact from that. We're going to take a look at that. But then I also want to show you the last two times that we had rate hike cycles, what happened in the market when cuts came. So we'll look at 2019 when there was a pretty significant uptick in rates, and then when those cuts happened, and also 2007. And that rate increase cycle we saw, and then the cuts coincided with that crash. So we're going to take a look at that. But before we get into any of that, we're going to start with Ask a Trader. And don't forget, weekly, I do a live Ask a Trader segment. And it's an opportunity for you to bring your charts, your questions, come hang out, come talk markets with me. It's live. You can find that link on my Facebook page. I'll actually post it in the show notes of this video as well. But come and join me for a live Ask a Trader for any questions that you have. And if you want to get weekly charting a few times a week from me, a market review, preview video, exclusive access to different content that I share, consider signing up for the Courage community. If you're interested in that, just hit me up with an email, couragepaysbetter@gmail.com, and I'll walk you through how that process works. But with that said, let's jump in to Ask a Trader. And so there's just one question this week for Ask a Trader, and that comes from one of the members of our community, Bill. So this week I'd posted about SMCI and how there was some speculation and accusation that they were guilty of some fraudulent practices in terms of their accounting, and that this group had filed a report and opened a short position against SMCI, which was like, okay, we need to be ready here for potential drop off in this company. And we did see that there was a massive move down. And one of the ways that I played it was by buying puts. These are options contracts that increase in value as the price of the equity goes down. And that's what happened with SMCI, made a decent profit on that. But Bill was not able to get in because he was trying to short with shares, and he couldn't because the SEC Rule 201 had been triggered. So I just wanted to take a moment to show what that looks like and what that rule is, and talk about it and what that rule means. And so let me bring up my screen here and share this with all of you so you could see it. But basically you can see here, the SEC's Rule 201, also known as the short sell price test circuit breaker or alternative uptick rule, limits the price at which short sells can be made when a stock's price drops significantly. The rule's purpose is to prevent short selling from causing further price declines in securities that have already seen a significant drop in price during the day. So basically, this SEC Rule 201 is in place to prevent people from piling in and just driving down a stock's price that has already been crushed. And so that's what had occurred here with SMCI. And then here it just shows it's the main features of this rule. When is it triggered? When the stock's price drops by at least 10%. The restriction, short sellers are required to place orders at a price that is higher than the national best bid price when the order is placed. Duration, the short selling restriction is in effect until the end of the trading day on the trigger day and the entire following trading day. And the rule aims to boost investor confidence and promote market stability during times of stress and volatility. And it also says here, some studies have argued that short selling trading bans are either ineffective or can lead to lower market quality and higher risk of market crashes. So again, I wasn't shorting with shares, so I didn't encounter the SEC Rule 201, but Bill did, as he shared in our community. But that's where options can be very helpful and can come into play and be a way to work around the use of shares. So if you're ever in a situation where that rule kicks in, you can buy puts and still profit to the downside. And so that's what I was able to do. And the other thing that you could do too, and again, there's risk involved with all of these different strategies, but you can also sell calls on an asset that you expect to go down. Now, there's great risk involved in that, but if you sell calls, you're capturing that premium. If the price of the stock goes down, you buy it back at a cheaper price, you keep the difference. And so, those are just things that you can keep in mind, and you wouldn't want to practice and back trade those before you'd implement them. But they are things that you can use to your advantage when you have a stock that is dropping significantly in price, which is what happened to SMCI. And we'll see how this plays out. If this is going to be something that really wrecks the company long term, is it going to be able to recover from this? We don't know. We'll have to pay attention and see. But did want to address that question for Bill out there today. So Bill, hopefully that was helpful for you. I know he was a bit frustrated when he posted that message because he said, how the heck were you able to short it and I wasn't? And again, I was using puts, not shares. So there's a workaround for you guys next time you are in that position. Okay. So now let's talk about elections and rate cuts. Here we go. So there's obviously an impact in the markets whenever there's a presidential election, whenever there are rate cuts. And being that we've talked about that quite a bit here on the show, I just wanted to show on the charts at least some recent data in terms of what has happened, what has transpired to give us an idea of what we can expect here in a few months when the election occurs here in the U.S. and with the rate cut that's coming in September, what we can anticipate there. So what I'm going to do is share my screen here, bring up TradingView, and we're first going to talk about presidential elections. All right, there's Mr. Roku. We're not going there yet. We will be making a visit, but we are going to look at, I have this marked out on futures here, and this is where these lines are. This is the presidential election marked out, okay? So we could see here, this is November of 2020. So this was the last presidential election that we had. And you could see that this was following COVID. We had a push up. Here's November. You had, and this is a monthly chart, by the way, but you had a strong bullish engulfing candle that took out the previous 2 months. Notice that September was down. And October was down, huge push up in November, and then pushed up, just kept pushing, creating new all-time highs. So that's what happened in 2020 in terms of the election. If we go back to 2016, all right, here's the election year here. Here is August. So pushed up higher, new all-time highs, but then sold off. September was a sell-off month. October was a sell-off month. And then what happened here? We had it sold down in November, but then got bought back up. Bullish engulfing, took out all three of those candles, and then just went on a rampage higher. Okay, so that was 2016. So what we saw from 20 and 16 is down September, October, bullish engulfing November, shot up. Okay. Not saying that's going to happen this year, but just giving you an idea. So then let's go back. Let's look at 2012. So here's 2012 right here. So pushed up. Um, this is September, and then October sold off a bit. Now here's the election 2012, dropped down, hit the 20 on the monthly, got bought back up, and then what happened out of there? It pushed up higher to new all-time highs. Okay. So that's 3 consecutive election cycles, 2012, 2016, 2020, where sold down, a little bit of a pullback, and then push up to all-time highs after the election. Okay, so there's the last 3 instances to show us. Now, when we go back to 2008, you could see that we were in this big downtrend from that housing crisis, right? And here is November of that year. We were already in a downtrend. And you could see what happened here is you had a hammerish style candle. It wasn't fully done bottoming out. And it took 1, 2, 3, 4, 5 months. And the bottom was hit in March. And then this thing started pushing back up to new all-time highs. Okay. So out of the last 4 instances of presidential elections, you had pullbacks into the election and then a rocket higher out of the election to new all-time highs, except for 2008. Okay. So what does that mean for us? Well, again, this is just 4 years of data, but typically in election cycles, you do see the market perform well. And we've seen that so far this year, right? And we did have a little bit of a pullback this August, which is now behind us. We're in September. September is just historically weak, as is October. But if we follow suit like we did the last 3 years, this could be pullback. November gets bought back up, shoot up to all-time highs. Or it could be something completely different. We don't know. But that just gives you a bit of an idea of what has played out the last 4 times that we've had elections. Now, the last thing that I want to show you guys is what has happened whenever we have cut interest rates. And so here's the federal funds interest rate, effective federal funds. You could find this on TradingView. And you could see that this rate hike cycle started in March of 2022. And just look how steeply this climbed and how steady it's been held for, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So these rates have been restrictive for quite some time. And we don't know what's going to happen whenever we start to cut, but that's going to happen in September. The Fed has pretty much said that that's what's going to go down. Now, if we go back and look for instances of rate hike cycles and then cuts, we could see that rates were hiked from 2016 all the way into 2019, July 2019, and then August of 2019 is when we started to get rate cuts. So we're going to look at the charts to see what happened in August of 2019 and the drop that followed in interest rates. We're not saying the market drop. We want to just showing you the rates. And then from there, we have to go back all the way to 2007. And this is more similar to where we are now. If we just compare where we are now to where we are in 2007, we're quite the ways up there, right? And we all know what happened coming out of 2007 into 2008, right? The housing crisis. Now, I'm not saying that's going to happen again, but there are some striking similarities here. But notice these interest rate increases ran through, they were held steady through July 2007, and then they were cut starting in August 2007 and from there. So we're going to look on the chart to see what happened these dates whenever rates started getting cut. So let's just jump over to the SPX, and I'm going to go to the daily, and I'm going to have to shrink this, so bear with me as I do this. And here is, all right, so here's August 2019. So here's all of this was the rate increase cycle. And so here's what we get whenever we got our first rate cut. So you could see here the market bottomed in 2018, pushed higher, new all-time highs. And then right when August kicked off, here's where this is the month of rate cuts. right? We could see that it just kind of chopped sideways, found some support, pushed up, and then ground higher, went up. And then after that, by, let's see, that was August. So August until February the following year. Now, this was COVID, so this wasn't normal. You had a big drop. Okay. But you could see that even though rates were cut here in August, you had some sideways chop, you had some pullback, but they still went higher. So even if the market does correct a little bit and pull back from rate cuts, it doesn't mean it's going to fall off a cliff, because as we can see here, after it did find a little bit of a bottom in October, it did push up to new all-time highs into February. And again, this was the COVID crash, which was something out of the ordinary. So this is not something that you can link to interest rates. This was a worldwide calamity, right? This wasn't something that was unique to the US. So again, you could see this after this rate hike cycle, you could see that the market was pushing up higher in that cycle. Whenever they cut, it went higher. And let's say that we took COVID out of this, it would have just kept running. Okay. So from that perspective, you could interpret rate cuts as going to be beneficial long-term for the markets. Now let's go back to 2007 and let's take a look at what happened here. So leading into 2007, the market was pushing up, new all-time highs. And the first cut took place. This was August of 2007, same kind of thing as we saw in 2019. Dropped and found support, went sideways, and then pushed up to new all-time highs after the cuts, right? And then the housing crisis happened, right? So uniquely, just by looking at these last two times, whenever there was a rate cut cycle after a rate hike cycle in 2007 and 2020, they just happened to be followed by the housing crisis and the COVID crisis. So does that mean that we're going to have a crisis coming our way and then we're going to have one of these big massive sell-offs? No, this is just two data points. And it's just irony that this is what's shown up here on the charts. But the more important thing to look at here is just short term. From the short term perspective, is we can expect a little bit of a pullback and then a shot up to new all-time highs. Okay, so we'll see if we get that. And let me just go back here to the federal funds rate one more time, and let's go back. What was the rate increase before 2007? And that would be 2000, and then the first cut occurred in December of 2000. So let's go to 2000 and look at the December of 2000. Let's see if we see a similar pattern there. Okay. Let me shrink this down here. Bear with me. This is just raw chart work, man. We're just scrolling through here. So 2000. All right. So 2000, we had rate increases. And then December of 2000. Where's December of 2000? Right here. Here's where we had rate cuts. So December starts here, pushed up, dropped, pushed up. And then what came after those cuts drops. Okay. So interestingly enough, the last three scenarios that we looked at, after those rate cuts followed, again, this I would have to go back and study more. We saw a little bit of a push up higher, but then a drop off. And I can't remember back to 2000 what occurred. I mean, obviously 2001, 9/11, a crisis, catastrophe that occurred. But that's pretty interesting that after these big rate hike cycles and then cuts came, a little bit of a push up, but then these big drops down. So does that mean that's what's going to occur? No, but it's good to have this historical context as you're looking at the charts, as you're trading, as you're setting up active investments, to give yourself an idea of what to expect potentially in the markets as we press forward. So it will be interesting, to say the least. It's something that we're going to keep an eye on. And I'm going to have to go back and do a little bit more study to see, just out of those rate cutting cycles going back to more than just those 3 instances, what has transpired, and then I'll put those results in a later video as we get closer to election time. But now it is time for Mr. Roku. So let's check out Mr. Roku. The last time we were together, we took a look at the chart, and Mr. Roku was actually doing pretty good. And we'll have to see how he is doing right now. All right, so here we are. Move this out of the way. Tell you what, using TradingView is a skill in itself. All right, so here we go. So kind of sideways movement since the last time we came together, and we closed with a beautiful hammer. I mean, that is beautiful on the daily chart this past Friday. And there's really only one more moving average above it, that if it can get above this 200 SMA on the daily, there's nothing to hold this thing back until it gets up to the 200 SMA on the weekly at $159. So this thing could really take off and get moving. And it had that big, strong push out of here. We did look at that a week ago whenever it had that nice push, but you could see just it bounced out of this downward trend that it got into. I had this marked as a support that it couldn't break. Here's another hammer on a weekly candle. On the monthly, that's a strong looking candle. We're seeing volume increasing. And so there's no reason to think that Roku can't hit $80 by the end of this week. So let's make a mark here, and we'll come back and revisit this on Friday and see if it could hit this. I'm going to put target for Friday, September, what will that be? 2nd, 3rd, 4th, 5th, September 5th. And we'll check it out. But it's looking pretty strong. Everything is looking pretty strong right now. So we'll see if that holds true. But ladies and gentlemen, that's going to do it for episode number 31 of the Traders Podcast. So grateful that you joined me here today. I feel like Mr. Rogers, like taking my shoes off. Appreciate you guys. I will see you this Friday for episode number 32. Please post your comments, questions below. Like and subscribe. Share with your family and friends. If there's anything I can help you with, please let me know. If you're interested in getting coached, getting schooled, learning how to trade, invest, let me know. Hit me up, couragepaysbetter@gmail.com. Love to connect with you and help you learn this beautiful, wonderful, magnificent thing that is trading and investing. It's changed my life forever. Let me help it do that for you. And with that said, have a phenomenal first week of September. Love you guys. I will see you back here Friday for a brand new episode of the Traders Podcast at Courage Pays Better Than Fear. Take care, everyone. Have a great day.